Okay, everyone's today topic is going to discuss about the non-profit organizations. So for the one we should understand what the criteria for the non-profit organization and what's the difference between the profit organizations and how to prepare the financial statements. But fundamentally, there's following the accounting standard is not different with the commercial organizations. So non-profit organizations also has to follow the accounting standards and framework, right? So generally speaking, in accountings, we know that it's starting from the transaction journals, preparation of journals, journals through to the ledgers through to the trial balance, and from trial balance we presented with the financial reports. But there are some terminologies different in non-profit organizations. The income streams has to be different. So there will be fundamentally, generally speaking, there are probably three income stream. The member contributions, what we call as a member subscription revenue, donation, and the other trading activities. So fundamentally, there are three income stream. So today we're going to cover, we have to prepare each income stream revenue, then we're going to prepare the trading account profit and loss, then we're going to prepare the final income and expense financial statements. Then lastly, we're going to prepare the statements of assets and liability, because non-profit organization doesn't have the equity session, the owner contribution, and the owner taking up. But there's an equity session, but we call that session is the carry forward funds from the previous year and previous period, and the accumulated funds we added that, and that has to be equalized with the net assets of the balance sheet. So in a summary, there are 4 points we need to cover. The first one is member subscription revenue account, trading account preparation, in a summary, how we're going to prepare, and then how we're going to do the inclusive income statement, and how we're going to do the assets liability statement. But the full detail, you can go back to the portal, and you can watch the full scopes of the materials, and there are plenty of resources there. I just want to add this video is to understand in the simplest way about the concept. Okay, that is more important. So let's look on the drawing paper. So the first one, what we're going to talk about is so what we call is member subscription, right? So we're going to get a pen for the color. So that's pen. Okay, that's good. So let me draw that. Yes, okay. So member subscription account, right? Subscription. So that is a revenue account. Okay, so that's a revenue. So in other words, what we call as a member subscription is that the member pay for the organization. So this is based on, maybe you might recall the concept of cash accounting and accrual accounting concept. So if your organization, what accounting method you are using is based on that. So if you are using the cash accounting, so the definition is revenues and expenses are recorded when you receive the cash and when you pay the cash. But most of the organizations, you are using the accrual accounting, so that means regardless of cash is received or being paid, so we record the transaction when it's happened. So recognition of revenue and recognition of expense for accrual entry. So in this topic, we are going to explain about from accrual perspective. So let's look at a simple scenario, right? So there are three scenarios you have for the member subscription, right? Member fee pay. One is member, let's say M's as members, right? members pay for current year, for current year subscription. 2, members not paid, okay, for current year. Okay. 3 scenario, members pay current year plus future years. Okay. So there are the 3 possibilities for the revenue recognition. Yeah. So we know that in revenue recognition, the accrued accounting say that regardless of cash is received or paid, when the transaction happen, we have to recognize the revenue. So this one, when the members pay for a current year, and we already provide the service, so that means we have to recognize the revenue. Okay. For this one, members already consume the service from the organization but has not paid. Doesn't really matter the cash is being paid, but accrued accounting said the revenue has to be recognized. But in here they are split, right? So the first part is pay for the current year, we have to recognize that. The second one, pay for the future years. So they pay the cash, but its cash is not revenue. So we cannot recognize the revenue for the future year because we haven't provided, the organization has not provided the services. We cannot recognize the revenue. Okay, that's the simplest form we do. Yeah. So if we put the context for 10 members in the organizations, yeah. So yearly fee is $10. Yeah. So the scenario I put a context in 3 scenarios. Right? One, 5 members paid for current year. See the C year is current year, and 3 members paid current year plus future year, and then the last one is 2 members not paid. Okay. Yeah. So that's a scenario. Okay. So remember the scenario. Okay. So we know that based on the first explanation, we're going to recognize this one as a revenue. 3 members paid for the current year, we're going to recognize this one. We're not going to recognize this one. We're going to recognize this one. So mathematically, when you're working in here, this is a $50 we're going to recognize. Then this is the 3 member is going to recognize it. $30 we're going to recognize. But $30 is not going to recognize. This one is not going to recognize. This is 2 members. We're going to recognize $20. Yeah. So mathematically here, we're going to recognize the revenue as $100. We're not going to recognize. Okay. We're not going to recognize $30. Okay. So that means you got a 130 in here. Yeah. But your total cash is how much they pay. Your total cash is you go receive 50. You go receive in the cash side. How much you receive is the first one is $50. The second one they pay for the current year and future year 3 members is $60. So you got $110 cash. So you can see that here cash 110 is not the same as what we are going to recognize as a revenue is $100. Yeah. So accounting entry, how we're going to journalize. So let's have a look on the second screen. Yeah. So the first one we're going to recognize because they pay the cash. So debit the cash because the cash is coming in. $50 credit we have to recognize is a subscription revenue. Okay, so $50. That's the first scenario. Yep. Second scenario, they pay the cash $60. So debit the cash $60. And we only recognize it partially for the half. So subscription revenue for the current year $30. The another $30 is, that's what we call is prepaid revenue, because they pay money first and then we provide the service later. So we call the prepaid revenue. Yeah. Sometimes prepaid revenue is a different meaning. So sometimes they call it deferred revenue or prepaid revenue, or in here what they call is a subscription advance. Okay, so this is not revenue. Okay, this is not revenue. Okay, so it's not revenue, it's not going to the profit and loss, it has to go into the balance sheet. So when we go to the balance sheet, it will be assets or liability. It cannot be the owner equity. Is not, this is not owner equity. Yeah, so we need to categorize its assets or liability. So number 3 is 2 members didn't pay, but accrued accounting say that we already provide the service, so we have to recognize the revenue. So that means debit, credit, we need to recognize as subscription revenue $20, and then debit has to be 20. But that is not a profit and loss account, yeah, because we didn't receive the cash, so you can't do the cash. It's not account receivable, you can't do it. So that's what we call is a subscription accrual revenue. Okay, in here what we call is subscription areas. Okay, so that is also has to go to the balance sheet. Look at which one is a current. So it has to be assets and liability. So but we specifically, it has to be a current assets or current liability. So the first one is a prepaid revenue. What does prepaid revenue mean? That look at from the perspective of organization, right? So the organization receive the money and then liable to provide to the members for the service. So it is, this prepaid revenue has to be current liability. Okay, accrual revenue is the member already consumed, the organization already provide this revenue service, but they haven't paid it. So we, from the organization perspective, we're going to receive the benefit later. So that's why it is the current assets. Okay, so if you draw the T account, so you can look at the T account on the revenue side. This is a subscription revenue T account. Yeah, so T account, debit, credit. So look at on the each journey. The first one go flow to the credit 50, the second one flow to the 30, the third one flow to the 20. So the running balance, the closing balance is 100. Credit, that's go to your profit and loss account and gain an expense account as a credit, right? If you look at the cash balance sheet account in here, debit and credit, you will have $50 cash, $60 cash. So on the debit side, $110 cash. Yeah. Then you have to draw the other 2 accounts: subscription advance and subscription in areas, right? So if you draw here subscription advance, okay, debit and credit. So look at the first one, you got a credit side 50, yeah, you got a credit side on the 50, yeah. So and then yeah, no, subscriptions prepaid is the second one. It's not 50, it's the second one on the 30. And subscription in errors, but that's we call it subscription in the accrual side. So debit, credit, the last one is a debit side. Yeah. So if you really want to add now all the debit and credit for the finance trial balance, you look at all the debits. The first one, there is no debit. There is a debit 110. There is no debit 20. So that means the debit side is 130. Credit side 130, 130. So that's balance. Then if you look at from the profit and loss and then balance sheet perspective, the cash flow to the balance sheet Subscription revenue flow to your P&L, income and expense statement. Subscription events and subscription area flow to the balance sheet, specifically under current assets and current liability. Okay, so that's the first one for the member subscription revenue preparation. Okay, so the next one is you are preparing bar trading account, or sometimes they call it bar trading account, or some sort of trading activities of the non-profit organization. So what the questions, what in real life is going to give us is they're going to give us the full trial balance, yeah. So they're going to give us all the debit and credit and the trial balance, right? You remember, you need to pull out what go to the profit and loss and what go to the balance sheet from the trial balance, because the trial balance is adding whatever the running balance, debit or credit, to the trial balance, but at the end is going to be equalized. That's trial balance objective for. So what you have to do is prepare the trading account. Remember, this is the trading account for, let's say, in this particular topic, there's bar or liquor, right? So that means the organization, the non-profit organization is selling this. So what you have to do is you have to take out income related to those activities. For example, but specifically what I'm saying in this example, related to the bar income, you need to take it out. And you need to take it out all the expenses related to bar activities. Yeah? But you might have a, don't forget, this is the key, you might have a depreciation expense for bar equipment. Okay, if you have a product, you need to add that cost. Okay, yeah, so you have that cost, so you add all the expenses and you got income. So income minus expense, you will have profit or loss. In other words, surplus or deficits from this activity. So that is a second step you need to do. So in summary, you're preparing the profit and loss for the trading account. Yeah. So as I said, they are generally, at least you have a 3 revenue stream, right? Member subscription revenue, trading revenue, and then other revenue. So other revenues will be probably the donation revenue. Okay. Then the third one is we're going to prepare the inclusive income statement. So you bring up for all the revenue what you already calculate. The first one, we got a subscription revenue, the one we already calculate, right? We bring this one back. And the second one is bar trading revenue. We bring this one back. And the third one is, that one is from donation income, because we haven't taken it out yet from the trial balance. So this is coming from your TB trial balance. Look at the trial balance, you bring that one. Add all of those, that will be your total income. Yeah, total income. Then bring everything back from the, bring other expenses which have not been we recorded. We only recorded the bar related expenses. There are other expenses, you bring it in. But in here, note it, you cannot put back the bar expenses again. If you do that, that means you are duplicating the expense, and your finding the last profit and loss figure will be wrong. Yeah. So you bring all the other expenses, you add it, that will be total expense. Yeah. Then we do the same thing to the income minus total expense. You have a surplus or deficit. Yeah, for that non-profit organization. Yeah. Okay. Remember, this is a key you need to carry forward to the balance sheet. Like commercial organization is a kind of retained earning. We call it RE in the profit center. But in here we call it accumulated funds. Okay. So the last one, we're going to prepare assets the statement of assets and liability. Yeah. So what we do is simply the last one, statement of what we call is assets and liability. Yeah. So we're going to bring back from TV all the current assets, non-current assets. Remember, there is a one from the subscription revenue account calculation. That is what we have to prepare is a revenue accrual account. In other words, the subscription in areas, right? That one is you have to add in here. Then you're going to print it from trial balance a current liability, non-current liability. Here you need to add from subscription revenue account is prepaid revenue, or in other words, subscription in advance. Okay. So you have a total assets, you have a total liability. Total assets minus total liability, you will have a net asset. Okay. And the equity section, you have an opening balance of the funds, yeah, we have in the equity, plus the one you calculate in the income and expenses is a net earning, right? Retained earning. In other words, what we call is a accumulated, right? Accumulated funds. That is the amount we calculate in the third step. So you're going to add that, and then you will have that figure. So this and this has to be equal. That is we call a balance sheet. Okay. So in summary, this is short video. We're trying to explain the four part. One is subscription revenue, how you're going to do with the accrual entry, and then preparing the trading account, bar trading account, profit and loss. Then we do the third step is preparation of the income and expense statement for the whole organization. The last one is we do for the statement of assets and liability. I hope you understand the concept, and then you also need to refer to the actual resources and the other resources to get a more understanding and practice one practice exercise that will give you the full scope of the understanding. Okay, I will see you in the next slide. Thank you.